Yo, what's going on, guys? Welcome back to the channel. If this is your first time here, my name is Vince and I post on this channel every single week talking about the stock market, talking about options trading, teaching you guys some option trading strategies. So if you want to stay tuned for some future videos, learn a little bit more about the market, then make sure to go ahead, scroll down and press that subscribe button. So today is October 28th. Tomorrow, October 29th, is probably the most important earnings day of the entire year. We have four of the largest companies on the stock market. We have Apple, we have Amazon, we have Google, and we have Facebook all reporting tomorrow after hours. And depending on how they do and how Wall Street takes their earnings reports, it will most definitely affect where the market goes for the remainder of the year. Not only do we have these earnings reports, but we also have the presidential election, and we have some more virus fears coming into the market. But in today's video, I want to go ahead and focus on those four huge tech companies. I want to go ahead and jump into the charts, show you guys some technical analysis, go over some support and resistance lines that you have to pay attention to, as well as the expected move on these stocks, the amount that's already priced into the option contracts. So if you guys are playing options for these earnings, which maybe some of you are, if you're just buying calls and just buying puts, you need to make sure you know what the expected move is. If you're not totally sold on just buying calls and buying puts, I'll go over some option strategies that you can use for these earnings, including iron condors, strangles, as well as some spreads that you can do to protect yourself a little bit more going into these earnings and still take advantage of some of the moves. So before we get into this, make sure to go ahead and smash that like button for the YouTube algorithm. It'll really help out the video as well as the channel. And also subscribe to the channel and press that bell notification so you know every single time that I post on the channel. Alright guys, so we got the charts pulled up. Let's go ahead and start breaking this down. So first things first, let's look at the earnings calendar. This is the Discord chat where we post the earnings calendar every single week when it's earnings season. So right here is the after close. We have Apple, Amazon, Facebook, and Google. So some really big ones. We also have Twitter and Starbucks after hours, Activision. And then in the morning tomorrow, we have Shopify, Moderna, Spotify, or some ones to watch out for. So let's go ahead and focus on the four big tech stocks: Apple, Amazon, Facebook, and Google. So starting out with Apple, what we're looking at here is the daily chart on Apple. And I want to just go ahead and break down some technical levels, and then we'll go over the expected moves. So the lines you see here, the blue one is the 20-day, the yellow one is the 50-day, and the green one is the 100-day. So first things first, let's look at what happened last earnings. So right here is last earnings. This is around July. And you can see we had a nice gap up there, and we never fully closed this gap. So the first thing that I want to see is, does Apple want to close this gap, which is right around $96, $97 a share. Now, does it get down to that level? That's a pretty extended sell-off. That's about 15%, I believe. Just about 13%. I don't believe it will get moved down 13% on earnings, but anything is possible right now with the market. So that's one thing to watch, that gap closure right there on Apple. And the next thing to watch is that $100 psychological level. Now, sometimes stocks will trade on psychological levels, and 100 is most definitely an important one. It's a 3-digit to a 2-digit stock price, right? So if the stock falls below 100, you're now trading in the 2 digits. It doesn't really mean much with technicals and fundamentals, but sometimes you will see a reaction around psychological levels like that. The third one to the downside that I'm watching is the 100-day moving average. So that's right here at around $107 a share. We want to see if Apple does have bad earnings, if there's a negative reaction for the stock, can it find support at that 100-day, which is sort of right around this previous low here on Apple back in August. So we might be able to see some support here around $107 a share if there is bad reaction to the stock. Now to the upside, say if Apple has some really good earnings and it starts to move up and Wall Street likes what they reported, now we want to look at this previous high. So we have a previous high right here around $125 a share. And if we do see a positive reaction and we break through these moving averages, we can see a retest of that 125. Now that to the upside is around a 11% move. So, pretty large move as well. But if we get some positive reaction and we get some continuation in the stock, the next level to the upside that we want to watch is that $125 level. So now I want to go ahead and break down the expected move. So what you do here is you go to all products on Thinkorswim, you type in the ticker AAPL, and you can see the expected move right here is about $4 a share. So if Apple moves more than $4 a share to the upside or the downside, your calls or your puts will appreciate in value. If it stays between $4 a share, then unfortunately those will get implied volatility crush. So today on Apple, we closed around $111. Now tomorrow, obviously Apple will maybe fluctuate a few dollars a share, but let's just go ahead and run this off what today's closing price is. So today's closing price is $111. So to the upside, you're looking at $115 a share, and to the downside, you're looking at $107 a share. So if Apple stays between this range right here, if Apple stays between 115 and 107 post earnings, then if you bought calls and it goes up, your calls will not appreciate if it only moves up to say 113. Or let's say Apple moves down to 110 and you had puts and you think that those are going to appreciate. Well, unfortunately, they will not. Apple has to go below 107 for your puts to appreciate. And that's because this expected move right here in between this range is already priced into the option contracts. So definitely something to keep aware of. So this is the range that the market makers, Wall Street, are expecting Apple to move post earnings, somewhere in between this range. So let's go ahead and watch that. What's pretty interesting is that right now the expected move to the downside is sitting right there at that 100-day moving average. So definitely that we should see some support there around 107. All right, so here is the daily chart on Amazon. We have the moving averages here as well. Again, the 100-day, the blue is the 20, and the yellow is the 50-day. Now, looking at Amazon, we've been in somewhat of a range here. So the top range are around $3,500 a share, and then we have a bottom right around $2,900 a share. So two important technical levels we have to keep an eye out for earnings. So if we drop, we want to see that 2,900 hold, and if we go up, we want to see a break of 3,500 to break past those all-time highs. Now the 100-day moving average is right around 3,100 a share, so that's an important level to watch. Can we find support at 3,100, which is the 100-day moving average? If not, we could see some downside back to this 3,000 level, which is another psychological level, or we can see it down to these previous lows right here at 2,900. Looking at the previous earnings, here was one right here. We had a gap up and a continuation. On this earnings, we had a gap and a continuation. So the last two earnings on Amazon have been good post-March, which was the time that the stock market fell due to the virus. So we've been on a nice uptrend, and now we're here looking at another earnings report coming up. We have some overhead resistance at 3,200. So we see some previous resistance, 1, 2, 3. It looks like a little bit of a triple top here on Amazon around 3,200. So that's a possible level to watch out for. But, right now we're a little bit below it. We closed at 3,162. And if we have positive earnings, we can see some more upside up to this previous high. If not, we want to make sure we hold the 100-day or this 2,900 level. And if that doesn't hold, we definitely see some more downside here on Amazon. So now if we go up to the All Products tab, we can see the expected move on Amazon is around $135 a share. So just about a 4% move on Amazon after earnings. So 135, if we add that to the closing price today, that comes out to right around $3,300 a share. So 3,300 is the top range of expectations. And then if we subtract 135 from 3,162, we get 30.27. So 30.27 is right around here. So that is the expected range of Amazon, a 4% move up or down. If Amazon stays between this range, your calls or your puts will get crushed by implied volatility. If you want to set up an iron condor, if you think that Amazon will stay in between this range, you can set up an iron condor and you will take some advantage of the premium that decays. So that's another play for Amazon you could do. But Amazon, again, has expensive option premiums, so be careful. This is usually just for a larger account to play Amazon on these earnings. So there's the expected move. There's some previous resistance points that we want to keep an eye out for. And last but not least, we do have a little bit of an uptrend here. So if we go from the bottom to the top, you can see that we're holding this trend line, this white trend line. I'll go ahead and delete some of these lines here to make it a little bit more clean. But we are holding this uptrend, and we want to make sure to hold this into earnings. So that's Amazon, guys. Some technical levels and the expected move on this stock. All right, so moving on to Facebook here. Here's the Facebook daily chart. We have the 100-day moving average around $256 a share. So definitely something to watch. 256 is the technical level we have to watch if we fall down to this 100-day post earnings. The next level to the upside we want to watch is this previous high right here around 285. So 285 Could be some resistance. That's a previous high here on Amazon. That's one to watch as well. If we break through that 285, we could see some test of all-time highs around 300, around 304. But that's quite a bit of a move. So from today's close, that's about a 13 to 14% move back to these highs. So quite a bit of a move if we move past that 285 up to these all-time highs. Now looking at this gap, this is another thing that I want to point out. Here was a gap up for earnings. So we had earnings around July. We gapped up and we've continued ever since. We tried to close it right here. We didn't quite get down to the bottom to close it fully. So we sort of closed it at this 250 level, found some support at this 100-day moving average. So right here, we have a 250 support right around the 100-day. So we can see that Facebook definitely respected that level, and maybe it will respect it again here on earnings. But if we do fall and we want to close this gap, if the stock wants to close the gap, that'll be just around $235 a share. So if it falls down to the close the gap, we're looking at $235. But we also, again, have some major support here around $240. So looking, we have top, almost a quadruple top here at $240. So that is another level that I would keep an eye out for. $240 should be some really solid support if Facebook falls on earnings. Now going up to the All Products tab, typing in Facebook, we're expecting a $14 move on Facebook post earnings. So 14% of 267. 14 divided by 267 is a 5% move. So a 5% move is priced into the option contracts for Facebook. So again, that was what, $14. So $14, if we subtract that from the closing price today, we're looking at $253. So 253 is the bottom side expectation for Facebook. So that's right around here. And then the upside expectation, if we take it from today's closing price, is 281. So 281 is right around here on Facebook. So the expectations for the stock to move is pretty close to some of these levels. So the bottom side expectation is close to the 100-day moving average. So definitely we could find some support there. And the top side expectation is pretty close to this previous high here on Facebook. So we could see some resistance. So if Facebook moves between this range, once again, you want to take some iron condors if that's the bet you want to take. The iron condor will make profit if it stays between this range. If you think Facebook breaks past this, you can buy some calls, maybe some cheap calls, just to not risk a large amount of your portfolio to keep it safe. And if you think Facebook really won't do well, you could try to play it to the downside. Now, my personal opinion on Facebook, I think that the advertising that went into Facebook, the Facebook ads for the last 6 months, the last quarter, was definitely something, bigger than before. There was a lot of political ads. There's a lot of e-commerce ads. There's a lot of ads across the board. And I'm sure Facebook is trying to monetize that as much as they can. So you guys saw Snapchat. You saw the amount of ad revenue that Snapchat made, and you've seen the move that it's made since then. And I feel like Facebook should take part of some of that ad revenue and should see a positive reaction post-earnings. Now, Wall Street definitely has some high expectations. So if it doesn't beat expectations, we could still see the stock stay flat or slightly go down. But my gut feeling is that Facebook had a great quarter with ad revenue on their platform, and I think we'll see a nice positive reaction here in the stock. So last but not least, we have Google here. Google is definitely one we need to watch. It doesn't move as much around earnings time. It's less volatile than some of the other stocks, but it still definitely has an effect on the market. It has effect on, some of the revenues, the ad revenues that they pull in, as well as on YouTube, one of their biggest money makers. So looking at Google, what we first see is this great uptrend. So we have this white line. This is a great uptrend here. We respected it here back in August, and we're respecting it. It looks like we might respect it again here, but it also comes all the way back down since March. So a great uptrend here. And right now, which is pretty interesting, Google is at the 100-day moving average. We saw in the last 4 stocks, we were not yet at that 100-day, but on Google, we're sitting right at it. So interesting to see. We're at the 100-day already. So we definitely want to see some positive reaction here in the earnings. If not, we're going to break through that 100-day, and that will definitely be a negative thing for Google stock. So first technical level that I'm watching is definitely, like we said, the 100-day moving average, which is right around 15.16 a share. So right around 15.15, right around this level, that's where the 100-day is sitting at. So that's the number one. Number two is this previous resistance. that turned into support. So it looks like more of a range here, which is right around the 1450, 1475 range. So we found previous resistance here. We had a triple top that broke through and continued higher. And now we found support around that area on this trend line and continued higher. So if we drop because of earnings, we definitely want to see this area hold. So right around 1450, 1425, that's something we want to see hold, because if not, we're breaking previous lows, we're breaking this previous resistance that turned into support, and that will definitely, indicate potentially more downside. So looking at some of the last earnings reports, we saw a nice run up post earnings here. We saw a nice gap up and run up post earnings back here in April. So we had some positive reactions in the past because of earnings, and hopefully we get that same move here, bouncing off the 100-day, bouncing off this trend line, and moving back up to the upside. Now on the upside, we do have some other resistance points we want to look at. So number one, we have this 1650, 1645 area, which is a previous high here on Google. We also have this gap right here. So we have a gap closure, which also looked like resistance in the past, right around 1575 a share. So that's another one to watch, 1575, 1645, 1643. And then of course we have the previous highs here around 1731. So some levels we want to look at to the upside. But now let's go ahead and pull up the expected move on Google. So going to all products, typing in Google, we have a $47 share move expected on Google post earnings. So if we take the current price and it's 47 divided by 1516, it's about a 3% move on Google. So you guys can see the market makers are expecting a smaller move than some of the other stocks we looked at. In this case, it's only a 3% move. So on Google, $47 a share move. If we take 47, we subtract it from the stock price today. We're just going to use today's closing price. That's $14.69. So that's right around here, $14.69. And if we move it to the upside, 1516 plus 47, that's right around 1563. So 1563 is right here. So that's the expected move for Google to trade between post earnings. That's what the market makers are expecting. If you think it stays between, you take an iron condor. If you think that it'll move either to the upside or downside and beat expectations, you can take a strangle, which is something I've talked about here on the channel before. That's something you can take as well. You're not directionally biased. You just think that it'll move more than 3%. So at these expectations, which is pretty interesting, you can see this bottom expectation is right around this supply area. This demand area on Google. Looks like we had found resistance, found support, and this expected move is right around there. So we possibly could see some support here around 1470 a share if it's to the downside. If it's to the upside, it looks like it wants to try to get close to where this gap down was. So looking at Google, we have a 3% move expected on earnings. We have some previous resistance and support areas, and we have this really nice trend line, which I'm hoping we hold, and the 100-day moving average. All right, guys, so I hope that those technical breakdowns for Google, Amazon, Apple, and Facebook help you a little bit coming into the earnings reports tomorrow after market close. Make sure to take a look at some of these technical levels. Make sure you have your strategy set up, and make sure you're not putting too much on the line going into earnings. It's extremely risky to just buy calls and just buy puts. You will lose money if the stock stays between those expected ranges. You will experience implied volatility crush. If you enjoyed today's video, don't forget to smash that like button for the algorithm. Make sure to subscribe, as well as comment down below if you're playing any earnings plays. Let me know your thoughts on today's video, and hopefully you guys will come out victorious on some of these earnings plays. If you guys want to join the Discord chat, it's going to be the first link in the description below. Join 1,200 other traders talking on a daily basis, setting up earnings plays, talking about earnings plays, somewhere to collaborate with some other traders and some other like-minded individuals. But that's all I have for you guys today. I hope you enjoyed today's video. I hope to see you in the next one on Friday. Get outside, enjoy the rest of your day, and get ready for tomorrow's earnings reports. I'll see you guys later. Peace.